Welcome to my weekly review. Today is Saturday, June 21. It's early, folks. Haven't had my first cup of coffee. Anyway, you're looking at a daily chart of the Nasdaq, which is down on Friday, 98 points or a half a percent, 0.51%, with volume slightly above the 50-day moving average. We had the quad witching on Friday, which usually increases volatility and volume. But we were off on Thursday, June 13th, and we had the Fed, excuse me, June 19th, and we had the Fed meeting on Wednesday, and he had a press conference around 2:30 Eastern time and spoke for a while, and the market really didn't have a chance to react. So I was thinking that on Friday we might get some violent reaction to the Fed, but it seems like, they've been kind of neutered a little bit and that the market kind of knows what they're going to do next. It's going to be interest rate cuts. It's just a question of time. It's when, not if, they're going to lower rates. And so it could be in the next meeting in July or in September, but the market will sniff it out. And I think that's your next catalyst for your rally here is we're going to take out the uh, 20,204. That's my thesis here. It's had this 27% correction from peak to trough, December 20th to April 7th. Now we've rallied up, 30% roughly, and it's just digesting gains in here. Just, big rally and now digesting gains. And it does this. It rallied here. Then you had your pullback, rallied up, and then a little, digestion, rally up, digestion, and that's what it does, rallies up and digests these gains here. So mm, I think it's the trend continues. The trend is higher. I know a lot of people, get negative when the market doesn't go up every week, and it's been going sideways here for about 3 weeks here. If we take a look at the weekly chart here, you can see these weekly closings on the Nasdaq. Excuse me for toggling back and forth, but I want to zoom in here on these weekly closings as they closed at 529, 19,529 3 weeks ago, 2 weeks, 19,406, and then last week 447. So it's just been kind of tracking sideways, digesting gains, backing and filling, consolidation, whatever you want to call it. But this doesn't mean that it's going to roll over and die and that all the, indicators are terrible. I just believe it's pausing in the middle of this rally, and we're going to get some catalysts here going forward. Earnings season's pretty much over, and we're in between earnings season, which will start back up in July. But that's also as a catalyst as well as the lower interest rates going forward. And that's my story, and I'm sticking to it. I want to go back to the weekly here. The index was up, 40 points or 0.2%. Just, kind of a flat week. Like I said, digesting gains, but nothing seriously wrong with the index here. I think it's fine. I do want to point out that these moving averages here, I have it on the 5. I should switch it to the 10 for the index. Yeah. All right. Switch it to 10, Marty. Yeah, don't be stupid. I know it's early. There we go. Apply changes, you dummy. All right. So the Nasdaq just closed a tick below the 10 there on Friday, but you could see the 10, the 21 have rallied through the 200. And now the 50 is about ready to do it. So we're going to have this stacked uptrend here with the 10, the 21, the 50, and the 200 heading in the right direction as we take out that 20,204. That's my thesis anyway. It could all go, it could all go sideways, but that's my thesis for now. We just take it one day at a time, folks. Don't get too far ahead of ourselves or make predictions. Just trying to, see what's going on day by day, with the indexes. This is the S&P having a little trouble at that 6,000 level. It's been playing teeter-totter here. It goes up, it goes down, it goes up above 6,000, below 6,000. Even on Friday, it went up above 6,018. The low was 59.52, closed at 59.67, down 13 points or 0.22%. The volume was higher with the quad witching. And I don't really want to go through the IWM There you go. Got rejected at the 200 or the Dow Jones Industrial Average because it's only 30 stocks and I don't really, I own a few of them, but I don't trade them. And this one is pulled back below its 200 now. So anyway, my agenda for today is I just want to go through some of the earnings reports from last week, talk about some leading stocks and then some thematic industry groups like energy, space, quantum computing, oil and gas, then some leading stocks. So that's if you're interested, that's what I'm going through, and I definitely have been into the leading stocks. The relative strength stocks have been helping. If you've been at mcstockcharts.com, then you know what stocks we're talking about here. I'll get to that in a minute. JBL reported last week, and then on Tuesday ramped up nicely, nearly a 9% move, followed through on Wednesday, nearly 4%. We were off on Thursday, but then Friday came in and had another strong rally. So a great week for JBL, up 17%. Following the earnings report, that's the type of earnings response that we like, right? Lennar, bad news. You can see these big red numbers here, but the stock didn't go down, right? I mean, it had a little reaction lower, but I think the bad news is all priced in here. Lennar, yeah, just down 2% last week on a pretty weak report. So maybe that low here, 98, maybe that was your last chance to get it below $100. Lennar, anyway, not a great report. KR had a nice response. This is Kroger, owner of, Safeway, Fry's. This one broke above its downtrend line on Friday with a nice move of nearly 10% with, strong volume. That's a move not to be ignored. Still within the base, though, within this flat base consolidation area. The other one was Accenture, which I don't really want to show. This hurts my eyes to look at that. Ouch. I'm sorry if you own that one. DRI. Restaurant business has had some challenges recently because, the economy's slowing, consumers not spending quite as much, and some of these companies are blaming the GLP-1 drugs for people not eating or drinking alcohol as much as we used to. Maybe that's a good thing. I don't know. CarMax reported good response though for Darden, not bad. CarMax reported, and this thing's been, in a stage four decline, maybe can break out here of this stage one base and head into an advanced phase here. But a decent report for CarMax and a nice move. But the one I really wanted to get to is GRRR. It's great. Gorilla, as Tony the Tiger said, it's great. Had this nice wedge pattern prior to the earnings here. It ramped up 2 weeks ago, and I had this on the ready list, and it just pulled back. Caution ahead of earnings to its moving average and then popped 34% on Friday. Thank you very much. So it had that, 2089 buy point that it just blew right through there. And I'd say the next area of interest is at 2971. I don't see why it wouldn't take that out with this. When companies go from losing money to being profitable, and raising forward guidance and, making money, that's the first year or two is when they appreciate, a great deal. So this is definitely one to watch. It could take out the 29, it could take out the 41, with a couple more quarterly reports like this, you're looking at triple digit sales growth. All right. That's it for the earnings. Like I said, earnings season's pretty much over. And we're going to wait for July for more reports. But I want to go back here to CoreWeave. I had a question about, when to buy a stock and the time to buy. They're asking about, do you buy it pre-market, the first half hour, the first hour, the middle of the session, the end of the session? I buy it when it goes through its pivot point. And I had a pivot point on CoreWeave last week at 154.50, as that was the high from the prior week. This is your chart as we close the session on Friday the 13th, and the high was 154.50. Okay, so if it can go through that, and it's got this little, flag pattern here. I was expecting it to tighten up and trade tight within a couple days, but this stock doesn't want to do that. So I had that 154.50 as a buy point. So when do you, buy that stock? Well, when it goes through that 154.50, and it did so on Monday. It did early. It pulled back to its 10. So I got to switch this now for the leading stocks because leading stocks bounce off their five there. So let me, if you'll indulge me for a minute here, I'm going to do this because I'm going to get into leading stocks here in a minute. So it's been surfing the five. You can see here if I zoom in here, every time it pulls back to the five, it finds support over and over and over again. So on Monday, we put this on the ready list, over the weekend, then it popped above. So the time to buy it is when it goes through that 154.50. And if I go back, and I don't think it'll let me. Yeah, it won't let me. Okay. I will do it when I get to the end of the week here. I'm going to go through the week here, and then it rallies up the next day. Then on Wednesday, pulls back slightly, still well above the five. But if you didn't get in, you missed out. And we were off the 19th and then the 20th, which was yesterday. Just bounced off that five once again, and that five was rising fast. So earlier in the week, it was what, 158, and as we go through the week, you can see it just keeps going up and up and up. The five is 162. Now it's 169, so it's going up. I don't know, $10 every couple of days. So, probably 179 on Monday, somewhere in there. So it could bounce off that again, pull back a couple of bucks and then bounce off there again. That's been the pattern. But my point is, the buy point is when it goes through the trigger point, right? Your buy point, it doesn't matter if it's pre-market, the first minute, the second. I know a lot of people talk about the amateur hour, the first 30 minutes or 60 minutes or 90 minutes. And I like to wait to see where the money's flowing in the market. But if I'm watching a stock and I want to buy CoreWeave and it goes through on this is here is Monday the 16th. If it's going through the trigger point, I'm buying it at that point. I don't care if it's the first minute or whatever. The last minute, the middle of the session. This happened to be 11 o'clock, so an hour and a half into the session. It kind of goes through that pivot point there of 156, right there. 154.50 is the pivot point. That bar goes up to, it's from 150 to 156. So anyway, yeah, that's the answer to the question. You buy when the stock goes through its pivot point. And I just wanted to point out CoreWeave had that nice flag pattern. That's why we had it on the ready list. Had a really strong week last week as I go through all the time frames here. Up 24% last week. Thank you very much. And just not much distribution in this chart here. As you look at CoreWeave, there's just a lot of buyers. That's not Aunt Sue buying this stock here. This is getting a lot of volume. And these Wall Street institutions, they spend a lot of money on R&D and they do a lot of work before they buy. So I think they've done their homework here and they know that CoreWeave is going to be a growing company and they're buying it, right here at 180 bucks. So if you got it there at that 154.50 trigger, congrats. Another one that since I'm mentioning institutional support, this is a circle. This one, yeah, there's no selling in this one either. It got support there at that 100 level. It looks like the IPO price was mispriced there at 31. Had that little, I don't know, little consolidation here at 100, got support, blasted up higher, maybe 2 days it held in there, went up to 200, then on Friday it was up to like 250, then closed at like 240, right? 248.88 was the high. So there's a couple of uh, big winning stocks. All right, I want to get to the themes here, and energy is certainly one. The alternative energy group is your number one industry group. So obviously there's some stocks in here that are doing well. None better than Centrist Energy, LEU. A very strong name, up 5% on Friday. We just look at the weeklies and the monthlies here. This thing has just been on a tear since it got liberated here. It went from 50 to 190. And this is what I talk about when you want to buy growth stocks when the market is trending higher. This thing's been nearly what a four bagger here in a short period of time. You're not going to get that with the Mag 7. I know people are married to Tesla and NVDA and Apple, and they've been so good to you for so long, but they're not going to be four baggers in a couple of months. They're not going to go from 3 trillion to $12 trillion market cap. So that's why I've been directing the folks at MC Stock Charts to these leaner, meaner companies, these smaller market caps, and it's been paying off. These ones have been doing quite well. And if you're, a little averse to the risk, I think the safer play in this group is GEV. They've got, sales and earnings growth looking at, I don't know, what, 50 billion in sales, market cap of 132 billion, more larger and liquid. It broke out here, ran up to 500 and pulled back to the 21 and found support. So this looks great. Once again, like I say, it's larger and liquid and safer and, but this thing went from 252 to 500. So it's been a two bagger in a very short period of time. Once again, you're not going to get that with the Magnificent Seven stocks. And that's why I've been kind of steering people away from that group for a long time, at least all of this year and probably half of last year, that they're just overloved. NNE, another stock in this group, had a nice week last week, up 22%. This is a weekly review, so I'm just kind of going through the weekly charts here. Vistra, another one, looks like the index, right, where it has this V shape, you know, um, peak to trough, all the sellers, out, and everybody who was out, who wants out, got out, and now these buyers come in. It's definitely got that V-shaped look to it. Up by 6.5% last week. If we look at the daily chart, yeah, just surfing its five there, like Stephanie Gilmore. Thank you, female surfer fans. All right, the space group. A lot of folks were expecting the space group to do well after Elon's rocket, exploded. I forget what day it was, maybe Wednesday. And Elon said it's just a scratch. That's a good attitude. But Rocket Lab was up 8%, I guess, on that news. So anyway, this thing's been surfing its moving averages. It's been a really strong stock since we got liberated here in April. This thing has been how low did it go? 14, right, to 30. So it's been a two bagger in a pretty short period of time here. And that's what we're looking for, that type of appreciation to help boost our portfolios. This is ASTS. It was up 11 days in a row, then pulled back on Tuesday, I believe. And I had people saying, "What's wrong with ASTS?" Well, folks, it was up 11 days in a row. It's not going to go up every day, although it seems like that. It's run from 22 to 45. But all it did was pull back to its five, and that's what it's been doing. So this is what I would say. It's, acting normal. Stocks have character. And this one, you can see the relative strength. This is a strong stock, and it's just been surfing its five. It pulls back to its five. So you buy it at the five, sell it when it rips up. Pull back to the five, buy it, sell it when it rips higher. It'll pull back to that green line here eventually. But there's nothing wrong with the stock when it pulls back one day. My goodness, we're getting a little complacent here. I believe in the market. Some folks are. Geez. Yeah, I mean, be a little patient, show a little patience. They're not going to go up every day. Anyway, that's it for the space. I have a lot of stuff to get to. Some people talk about bubbles, and I agree. There are some pockets of bubbles in the market. The quantum ones, they don't have a lot of sales, but the stock's been appreciating a lot of them here. I'm not going to go through all of them. This is one of the leaders in the group, IONQ, and this one actually looks pretty good to me technically. Then where it's got this, cup shape pattern, then you got this handle, this little shake out down to a moving average. That looks pretty good. That could show up on our ready list here soon, IONQ, but there's some real stuff that needs to be. Yeah, this one ran up from what, $5 to $19. QUBT is another one in the group. They got NA and sales, no sales, but the stock's got a nearly a 3 billion market cap. So yeah, this is surfing the five. It looks great technically, but fundamentally, yeah, you could say this group is in kind of a bubble here. Nice little wedge pattern here as it pulls back to the five. So, these bubbles can last a lot longer, and I mean a lot longer. Alan Greenspan talked about irrational exuberance in 1996, and the dot-com didn't bust till March of 2000. So this can last a long, long, long time. You can make a lot of money while it stays in a bubble. So just because I say, yeah, there's a possible bubble forming here, that doesn't mean you have to sell the stocks. These can be very, very profitable. But I believe the best quantum stock to own for my money is IBM. It's a slower mover, it pays you a nice dividend. It's safer. They've had Watson for what, like 30 years, you know, 2.5% yield. So it's going to pay it every quarter to hold it. I don't know. I'm just like IBM. It's been making new highs. It's just safer for me. And it's got the purchases of Red Hat and recently Hashi Corp, which is going to be accretive to earnings starting This quarter, we're gonna have a full quarter of HashiCorp earnings, so I'm looking forward to hearing from IBM on July 23. Anyway, that's it for the quants. I just want to talk about oil a little bit, another industry group that I like right now. Why? Well, because they're showing strength. EXE was and it went into the S&P 500 index recently, and this thing's been showing relative strength here, making a new high on Friday. I'm just pointing out, strength in the market here, just observing what's going on here. And these oil and gas stocks are flashing to me. EQT, this has got a natural gas component to it out of Pittsburgh, Pennsylvania. Had this 3 weeks tight and then popped last week 6.3%. So that one looks good. AR, I had this one on my ready list last week and it served us well. Nice cup with handle, blasted higher, up every day last week. We like that. It's been up, I don't know, about 10 days in a row now. Yeah, 5% move. We'll take that. RRC out of Fort Worth, Texas. Cup with handle pattern up nearly 5% last week. Yeah, I mean, it's been up every day for the last, I don't know, 7 or 8 days. So, yeah, I'm a front runner. I like stocks that are going higher. I dislike stocks that are going lower. I try to keep it simple that way. All right, and the last one I'm going to show in the oil and gas space is GPOR, Gulfport, GPOR. Another one that consolidated for a long time and making new highs here, breaking out of a base. So just trying to observe and show what's going on in the market, up 5.5%. The RS, it's got the blue dot there showing relative strength, volume coming in. There's a lot to like here with Gulfport. So Gulfport Energy. So and just observing here, there's a lot more in the oil and gas, but I'm going to stop there because I have a lot of stuff to get to. And every morning on mcstockcharts.com, I post a relative strength list. And it's a list of about 22, 24, 26 stocks that are above their moving averages, that have volume, that are trading above, $30. And I just want to show a group of them. But first, I want to mention that it is a fluid list, and that just because stocks are on it, they can come off it really fast when they do stuff like Apple Oven, which we love it when it's trending higher, but when it does this, it's adios muchachos, and just kind of showing that these lists are fluid just because they're on there. Dutch Bros was on for a while, it was trending, and now it's kind of going sideways. So it is below its moving averages. TMDX is another one. Yeah, it got attacked by the short report. And a short report doesn't have to be accurate. All it needs to do is create some fear, uncertainty, and doubt, and then sellers just sell first and ask questions later. And that's what happened to TMDX. AGX is another one that was trending nicely and has fallen off here. That was a leader in the group until it wasn't. TGTX, another, this is a drug stock. It was rallying and had an earnings report and sold off with earnings, just consolidating in a base here. Would not be surprised to see it rally back above the moving averages. But for now, it's off the list. So I just want to point that out, that even as I go through some of our stocks on this list, this is our relative strength list as of this morning, I believe. ARQQ, obviously above moving averages, and strong stock showing relative strength. So that's Avis. I don't get this one, but rental car, Avis rental car. Yeah, okay. Surfing the moving average, showing relative strength. The minor CCJ is on the list, showing strength. Electric contract manufacturer, CLS out of Canada on our list. Another oil and gas stock. I'm telling you, the oil and gas. Don't ignore it, or ignore it at your own peril. This is a Comstock. Definitely above moving averages, showing relative strength. GRAL, a medical services name, surfing the five nicely. Groupon, this one's been on for a long time. Had a nice run here. Groupon, very strong stock. This is some what you'd call options, quad witching shenanigans, it looks like on Friday. Pulled back nearly to its five. So I'll be watching that one next week. Hims and Hers, a very strong stock. Ran up, then pulled back to the 21. Found support. It just kind of surfed the 21 for a while. Now it popped last week. Had a nice week last week. I'm really only concerned with the daily charts on this one, but it is a weekly review. And Hims and Hers was up nearly 16% last week. Thank you very much. Hood. Robinhood had a nice week last week, just surfing the five, another one of our leading stocks or, relative strength leaders. MP Materials, definitely, the chart tells it all, right? Palantir, surfing the five. Another one is Roblox. This one's been strong for a long, long time. 50 to 100 now. It's been a two-bagger since it got liberated. What else we have? SEZL. SEZL has been sizzling. Very strong stock. Another construction name, Sterling Infrastructure. Yeah. So I'm just going through the list here of relative strength. There's a lot of stocks, is my point. And yeah, and so in a variety of different groups. So yeah, I can't be too bearish on the markets when I'm seeing this in all these different groups of stocks. We have leaders that are making new highs that are on our relative strength list that, these charts tell the story. Even a drug stock made it. Come on, man. The drug market has been beaten down, and this one's surfing its five, so it's definitely an anomaly in that group. All right. That's it for me. I just got to say thank you for watching. I have a couple things. In honor of the great Steve Jobs, we stay hungry, we stay foolish, we stay humble. And I just want to go through a couple of trades last week. I mentioned RRC, which was a winner for us, and AR, the oil and gas, which I've already mentioned. But Credo was on our ready list last week. Had a nice pop. It got upgraded one day and had a nice response. But, it's surfing its five here. And when it pulled back last week, to the moving average. We put it on our ready list and we're rewarded. I don't forget the weekly gain. Yeah, 16%. The other one that was on the list was Reddit, and that one was up nearly 18% last week. So we had some nice winners here in a week where the Nasdaq was flat. Reddit, I know a lot of people were hesitant to buy Reddit because it was below the 200. We saw the 5 and the 21 cross through the 50, which alerted us to it 2 weeks ago. And we put it on and it just kind of drifted towards its 21 here and then popped last week. So if you stuck with it for the extra week, then you were rewarded with an 18% gain in Reddit. And I believe the last one was GRRR. Yeah, nice move with GRR Gorilla. Showed that one earlier. They weren't all winners. We had some losers, including NBIS, which to me is going to stay on our ready list because it's just forming this little flag pattern as it pulls back to its moving average. Let's see some volume dry up next week, but this looks pretty darn good to me. You just got to be patient here, folks. This one's I believe is going to pop pretty soon. Anyway, that's it for me. And once again, I lie though, because I wanted to show just one exercise here, if you'll bear with me for a minute. Nasdaq, I did say last week it was up slightly, 0.2%, but that's not the point I want to make. I just want to show the Nasdaq this year in 2025 has been flat. So those people who are playing the indexes, are not doing very well. I mean, you're flat on the year. That's not even going to keep up with inflation. And if you are in the S&P, excuse me here, folks. I got to go over to the ticker symbol box. That might help. If you're in the S&P 500, you're up 1.5%, which once again, that's not going to keep up with inflation. But my point of this exercise is a lot of people are in love with the Mag 7 stocks, and I've been saying it for a while. I think it's a mistake. I think they're overowned. Yeah, they pay a little dividend, but that's not going to make up for a 20% loss this year. I just think that they're overowned and overloved. NVIDIA, I think it's been pretty flat on the year. Google, another one of these. Yeah, I've been steering folks away from these stocks in 2025. Maybe a trade. I did have Amazon, but it hasn't done anything. The other one is Meta has been done well. Give it that. Meta's up 17%, and Microsoft has had a good year. So if you're in those two, you're doing okay. But the Mag 7 as a group has completely lagged. So what are we into? What do we like? Well, I just showed you a list of like leading stocks, right? And that's kind of what we like. CoreWeave is my largest holding. I think it's been outperforming these Mag 7s, and that's kind of where we want to go to get this type of performance. Circles another one that's been performing well. ASTS, I showed you that one earlier. TSSI, AEVA is one of those LiDAR names, up 420%. And stocks that go up 100%, people say, oh, they're overextended, they're overvalued, it's moved too far, too fast. Well, here it is, up 100% here. And it just went on to continue. So pay attention, and I point those out a lot. Stocks that are up in volume, that are making big moves, they kind of tend to make more bigger moves as they go along. QNTM Quantum, Biopharm up 850%. Once again, it was up 100%. Well, actually, it was up 400%, pull back to down, up 100% only, and then rallied up 2, 3, 4, 5, 6, 800%. So, like I said, these are the type of names that I want to be in as opposed to these stocks down here, these lag 7 stocks. So, I could do this exercise. PSIX is another one. Oklo, this is one's been on for a long time. SMRLEU, and pointed that one out earlier. And these energy names, GRAL, Groupon, I mentioned this one earlier. Hims and Hers has been a monster. SEZL, also in Big Dave. Dave's not here. AU, the gold stock. This is the top gold stock this year. MP, I mentioned that material play earlier. TEM, Nancy Pelosi stock. Anyway, I'm just pointing out here's a bunch of stocks that I just listed that are up more than 100% already in 2025. Are they going to continue higher? Probably. I mean, stocks that make new highs continue to make new highs. Are they near buy points? Some of them are. Some of them are way extended. But my point is, you're going to do a lot better if you search and if you're able to identify the market direction, and if you're able to identify leading stocks, your stock selection. That's how you can be really successful in the market. And yeah, you could stick there with Meta and Microsoft and have a decent year, and that's fine. They're a lot safer. But if you want to take more risk, I think you will see a greater reward in some of the stocks we've been highlighting at mcstockcharts.com. Anyway, we never give up. Thank you for watching. That's my TED Talk for today.